What's happening, guys? We have another Sunday video coming at you, this time for October 30th and the week ahead. I got a couple things to talk about, and then we'll get right into scan for the week ahead. I'm going to go, I got a lot of good feedback with the last time that I went over things on the chart, so I will do some of that and just go over a few little things that, worked and didn't work for this week, things where, I could have probably improved on. And then just kind of go through what I'm looking at for the week ahead. Still, my best trades last week were the ones that I actually prepared for, meaning coming to the market prepared. So I've talked often, there's periods of times where you just have to wake up, right, and look at the 200% movers and get a plan from there. And that's where, maybe outperform. And then there are days where, scans matter for me, and I'm prepared, and those are the trades that I take. And had I not looked at the stuff the night before, the morning before, and sort of made that plan, I would have missed that opportunity, right? Meaning on small caps, when things are hot, when you have 200, 500, 1,000% winners, you literally wake up and there's just, it's a kid in the candy store, right? Now, sure, we had one or two small caps each day last week that were really, really good, but if you didn't come with a plan on something like Mullen, M-U-L-N, or something like Sava, S-A-V-A, then there was no trade for you. There wasn't enough action to really warrant a trade had you not come to the market prepared with a plan for it to come into particular levels and react accordingly. So, I've said in prior Sunday videos that, literally I'm not really using the scan prep in the current market, because you literally just need to wake up and see what's going on. And then there's also times where I use the scan prep in a big way. And, Friday, my two main trades were exactly that. Preparation from Thursday, react accordingly on Friday, and then that's that. So, Sava was an example of that. This is one that I feel like shorts got caught off sides a little bit. It had tanked down, and then it kind of did a nice bottom formation and filled that gap. We had the dip and the rip day, started to squeeze. So now it starts to come on my radar because, this is one thing, but this third day where it pulled back and it's still squeezing, that to me is next day, if it gaps up, blows out, there's a good chance we're going to unwind. And that's exactly what happened. And that's what I was prepared for. And I would not have seen this opportunity, right off the open. It wouldn't be something that I would have high confidence to trade if I was not prepared for that trade. So, getting information from the day before, I knew 20s was soaking a lot. I knew 2050s was a repeat bidder, 25K, 50Ks, and then they kept on getting hit. Flush down to 20s, repeat again. So in my eyes, it was probably somebody hedging maybe against calls sold, who knows. But again, the more it trades, the higher it trades, the faster it trades off that 2050 top level, the better. So we had a nice gap up, reactive trade, and then for me it was important to see 2050 start to get heavy based on the information from the day before, and then again for the sentiment shift, 20s to stay heavy, because that was the area that it was holding in base all day on Thursday. So once that gave way, nice unwind. After that, once it starts to break what the prior base was, in this case, you can see that it had a little bit of support right at, I guess, 1890s or so. Flushed under it, came back, flushed under it. Pretty much held a double bottom right at this maybe 1830s level. And then after it broke back up over that 1890s, it was, a squeeze into the close. But high probability trade off the open, and once again, something that I was prepared for the night, from the night before. Same thing with Mullen. Mullen, same sort of situation. And this was a trade that had ramped up prior day. And, you've got this nice exhaustion move, and you can kind of see that it's starting to form a base, which is basically right at this 34 level. And, you can see that it's forming a support, then it flushes under it, comes back. That 34 support now becomes resistance, right? So how do we use that the next day? So the goal would be to come into this exhaustion zone, which is what I call it. And so you can see where the support was, you can see where the support became the resistance. So in an ideal world, we've been talking about liquidity pockets where, it's thin in between. So there's, a support level and there's a resistance level. And in between, the liquidity is relatively thin. And so what happens is if you miss that cover, a lot of times you panic cover because it starts to move rather quickly. But really, it's just going to that next liquidity pocket. And you size up too much, you're emotionally charged by that move, and then you end up covering, and you look back and you're like, yeah, that was the top. So we had an exhaustion move, perfect right off the open, and as you guys saw, I went ahead and shorted into that move because I was prepared the night before. That is not something that I would just say, okay, I'm going to short Mullen today, because it's not going to come up on scans. You're not going to see it. It's probably up, 5%? So it's not something that if you're searching for stuff that's up 20, 30, 50, 100%, you're not going to see that trade. But there was a huge trade to be made there with a high probability that it was going to unwind if it exhausted out looking left at the prior levels and if it stayed heavy at the prior level of support. So those were the two main trades on Friday that I took that came off of scan for the night before. Something like ABVC, yeah, there's great opportunities, and the same thing with APLM. Great opportunities, for sure. But for me, it's a little bit more difficult to get in there, be super, super aggressive. Yeah, there was good trades. And yes, I definitely fumbled those again, but it is what it is. And the overall market is unwinding. I need to focus on that a little bit more. That, like I said last week, I felt like the secondary leg in a lot of the small caps was going to cause people to feel like we've got this crazy, bull market in these small caps. Like things are holding on, things are going to really rip. But in my mind, in my eyes, it was just a short cover. We went over BCEL and BPTH and SECO. And so you've got these secondary legs, but that's it. Because what happens is you've got all this action, all this volume. People are sizing in short based on that volume. And then a couple days later, volume's gone, right? So all that's left is the bag holders, which are never going to sell. And you've got shorts. So as it starts to kind of slowly rally back, it's just slow but steadily covering that's coming in. And until it gets to the next liquidity pocket, it probably won't stop. So that's exactly what you saw on stuff like BCEL, where it had that one-day wonder back because you had the high volume day, which had 63 million shares, then it goes down to trading like a million or two. So if you're positioned based on 60 million shares, and then it's only trading 2 million shares on the day, if you didn't cover yet and you go to cover, who knows if there's going to be liquidity there until it gets to that next liquidity pocket, prior level of resistance or whatever. And you saw the same thing on SECO, where you start to have this kind of rally back. It exhausts out into the liquidity packet, which kind of lined up, liquidity pocket, which sort of lined up with the daily chart VWAP. So you can see here it exhausted out right at there, and the same thing the next day. And you also had that, BCEL as well, BPTH, all the same kind of situation. So again, that to me made it look like small caps are just having all these secondary moves, which quite honestly gave me a little bit of pause, being a little bit too aggressive on something like ABVC, which maybe I was too safe on, and same thing with APLM, APLM right here. Once again, really nice setup, no reason to cover, probably played it too safe, but again, good opportunities regardless. For me, not as high conviction as something that I'm prepared for from Scan. We're shifting into a market where I'm going to rely a little bit more on stuff that comes out of Scan until the next cycle heats up. And as you guys know, 1,000% winner, a TPST, something like that, will supercharge small caps, and you'll have 2-3 weeks of really, really good action. Then there's going to be a sliding scale of, easy money, easy money, easy money on the long side, and then it shifts and goes the other way. And then shorts win, 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 win until they get overconfident, just like on PRZO, which we sort of talked about before that happened, when shorts got paid, They got paid to hold, and all of a sudden it went nuts. So, ABVC, another familiar face. Again, I actually posted a chart from last time it ran, and a lot of people actually thought that it was my trade from Friday, or Thursday rather. And it just goes to show you, these stocks have personalities. So part of the reason why I post, trades, these A-plus type opportunities or really big trade setups on Twitter is because later on, next time it runs, I can search my name with the ticker and see how I traded it before. It's almost like a database. So I can go back and see, and if you look at that ABVC trade, literally had the same setup again. A lot of times these things tend to do the same thing over and over and over again. That's not to say that you should expect them to every single time, but you can start to learn their personality. Do they typically peak out in the morning? Do they typically have one last hurrah midday before they unwind into close? Do they typically have, this or that you should be aware of? A lot of times they do similar things. And ABVC has done the same thing over the last, 5, 6, 7 times. Max created a historical analysis tool at IU. So if you click under the I box and you go to historical analysis, you type in the ticker and you can actually see the last 5, 6, 10 high volume days and see exactly how it traded in the event that you don't have maybe a chart saved. I know a lot of great traders use Evernote or some sort of maybe even their own personal Discord, but just to save charts so that they can go right back and say, okay, how did this stock trade in the past, right? And so that's the same concept. So we built that tool for you to be able to see that. And as you guys saw, and as I posted in the lounge, ABVC was very similar. But again, easier said than done for me this week. Being too safe again. The couple things that made sense to me and that we discussed. One was, pre-market I was saying, 3 becomes the key level. So the more it trades over 3, the better. And you can see how when it cracks this 3, comes back and exhausts out, that's at the point where it just has all failed follow through from there. So waiting for that prior level that, they're soaking to blow off, then comes back under. Once it is back under that level, I still don't trust it on a slam like this. I trust it after it tries to rebound and then fails. And so I got a little bit too cautious because to me it felt like a pretty easy trade. And anytime things aren't a headache or aren't too much of a headache anyway, I tend to cover more. And for whatever reason, most of the time it's the right thing to do. But in this case, yeah, I probably shouldn't have covered any. I second guessed it. And so later on in the day, this is the area that I was focused on. And you can see that 238 was the level that I gave. And I said, if it swipes through there, be cautious because the next kind of liquidity pocket probably goes up to 260s. But if that rejects, then I'm really, really interested. So you can see the volume associated with it. And so at that point, I actually made more on the trade late day than I did in the morning because I had taken the trade off the open. I covered it in the flush. It was a fast 40, 50 cents a share. And, I was trying to wait for a proper setup of, to come into my wheelhouse. It just never did, or at least I just wasn't confident to resize back into that trade. So I was waiting for it to basically exhaust out through here. The fact that it couldn't get through there, it came close. And had it gone through that and gone maybe 240, 260s and exhausted out, I would have entered. But in the event that it didn't, how many covers do you think were coming in here? Emotionally charged covers where they're fearful that it's going to swipe, right? Because maybe they oversized, they were anticipating 250 to break, so then it comes back up here and they're all nervous that it could break over 240s. Excuse me, 210s rather, not 250s. They were sizing in, anticipating kind of 210s to break, and then they oversize, and then they're emotionally charged over here, right? So all those folks now either covered slowly or panic sold and stopped out, right? So now this is when I started to get involved, and unfortunately, yeah, it would have been nice to be up here, but I wasn't. And anyway, much nicer trade into the close. after everybody was stuck on the wrong side. And a lot of times people think, oh, I missed it, so I'm going to avoid it. But really, had you entered that trade at this 240, 250, 260 level, you probably would have been anticipating a fade to 180s, 150s, 120s. So if it's 190, there's still room to go. So other than that, let's see. We talked about the false sense of strength, BCL and things like that, as far as, looking like they're rebounding and looking like they're strong, but the reality is it's just covers. We talked about the macro unwind, less staying power in small caps. Bias. I wanted to talk a little bit about this BTAI and actually LIAN. Sometimes one of my strengths is kind of seeing, the difference between shorts, coming in and actual soaking, like folks that are, maybe a fund is in there or something. And so the 2 times this week that I really saw that was on LIAN and BTAI. So LIAN was an example of, sort of seeing them walk shorts down, right? And then it swipes back up, and this is when I started to get long. And the idea was that there was a lot of volume. They churned a lot of shorts in there, and you can see they blow it out again and let shorts walk it down. Make them pay, let shorts walk it down. Make them pay. And that is something that promotes longevity. And the same thing with BIAF, BTAI, where I was looking at the same sort of situation here, where we had this huge, volume pre-market, but then we just had each kind of pop was failing, but there was no kill candle. There was no period of time where it did something like ABVC, where it just slammed down, right? And everybody is just screwed. And then the same thing again over here, where everybody is just screwed. BTAI was just sort of this slow and steady kind of controlled downside move. And when that happens and the trend starts to firm up, to me, it's all just kind of gap sellers selling it down, meaning people that were long maybe before, they got bailed out of a bag hold, things like that, and then shorts coming in. So I want to focus on the levels that it holds or that it sort of consolidates by, this being one of them, 280s range, and then, something like right over here. If it starts to base over this prior level of resistance, at that point we might have the longevity in the move. And that's exactly what, in my opinion, happened here, and that's why I was long side biased on the Thursday, Friday after the initial move on that particular trade. So I just wanted you guys to kind of see the difference between, the moves that I look for and the moves that I want to stay away from. And the more that it does, the more that I feel like it's about to reverse and it doesn't, those are the ones that are going to unwind. And an example of that is that ABVC. There we go. Example of that is like right over here where, there's that very, very high potential chance that it swipes and then it just doesn't. And now everybody's on the wrong side. Those are the ones that are going to have the most retail on the wrong side of the move. And then last but not least, what I wanted to talk about was exactly what we've been talking about on Sunday video. The last couple times we talked about this WW move, and I said that I liked it for an unwind. I said that it was one of my favorite sort of daily setups. And so I wanted to kind of just showcase this WW trade with the ones that I gave you as an example. So each day, last Sunday we talked about this, and I compared it to something like ACHR. You can see this same sort of setup right over here, just to kind of give you an idea, something like this. We talked about it similar to FNGR, which is sort of underway right now. It is similar to this BTDR that we went over last week, right? Where we talked about basically this concept over here, and then we finally broke down. And again, you can see WW kind of doing the same sort of thing right over here. And you'll notice that each time before the actual unwind, it does just enough to break through all the other resistance. And we actually saw that on APLD a while back. If you guys remember this, it had like 900 lives, right? And so similar concept where, just look at the general sort of area that it's been basing and the general area that it's been selling. And then as you can see, nice unwind from there. So these are all the same setups. And the WW that I gave you guys over the last 2 weeks was the same exact setup. And I just wanted you guys to see sort of how that went. VIRC, same sort of setup right over here. Same situation. I think, yeah, I did ACHR. So all the same. Hopefully you guys see it. And a lot of times what happens is everybody knows that these things are going to unwind. And then they position accordingly. And it does that one last push, like WW, over the resistance, and it squeezes everybody out before it unwinds. So really good opportunity on this WW. And again, obviously if, SPY will help that. It depends on the market that you're in. But it's always good to kind of keep an eye on these. And I always like to set price alerts because, yeah, you're going to forget about these. And fortunately, like WW, I had lots of price alerts and all these different names. I always put them. And a month later they hit. And I'm like, why is this one hitting? And I go back and look at the chart and I realize why. So anyway, let's get right into it. So as always, I am not a financial advisor. These are not buy or sell recommendations, and this is for educational and informational purposes only. Main watches for me, it's going to be Sava again. It did have a nice squeeze out into the close. So basically what I want to see, it might not be a Monday thing, but I want to stay familiar with it. I want to stay focused on it. But in my opinion, right around this 20 mark, if it pushes and it fails versus 20, I'm interested. I do think that we're going to have a nice fade back down towards, 17s, something like that. It just won't happen right away. It still needs to work out all the shorts. So keep an eye on it. Monday, Tuesday, maybe by Wednesday, we start to have this just steady liquidation back down. In my eyes, a lot of people got a little bit too aggressive. They short sold a little bit too low. They got caught on the wrong side, and now we are just sort of squeezing out the last of it. And in my eyes, if you look at, again, thinking about exhaustion zone, right? So let me just take these off for a second, make it a little bit more. Actually, I'll leave those on. But basically, 22, show you this right here. Looking left, ideally, it has 20 to 22 sort of exhaustion zone over this week. And then once it peaks out at that 20 multiple times, then we start to fade back down to 18, 17, and back where it came from. So we'll see what happens there, but it should be a great trade. It has been a great trade, and hopefully we continue to see it well. TAL, another nice one. This one is one that you had to be prepared for. I was prepared for it on Thursday, as you guys saw. It had the earnings report, and then they just kind of sold it off from there. The trouble with some of these is the only edge is sort of a situation like this where you're kind of prepared for it. It popped up towards the prior level looking left, and then kind of unwound. I reacted to that trade because I was prepared for it, but stuff like this is kind of hard. I mean, this is just you got to be there, and it's right off the open straight down. So I missed it that day. But I'm going to be watching it for pops to potentially see some sort of possibly gap fill, just like this EH trade, which was fantastic, by the way, which again, I missed out on it would have been a nice swing trade. But the goal all along was for the gap fill. We got that, and then we got even more. Crazy. But again, I always like to try to throw in little tidbits. Watch, you see these wicks? So each time it exhausts out, it sells off. Exhaust out, sells off. What does that mean? Means there's a seller present. Same difference when we talk about the wicks on the way up, right? It means there's a buyer present. If every time it dips and then it gets soaked back up, it means there's a buyer present in the tape. Something like EJH, right? On the way up, every time it dips, it gets soaked up. This is obviously under a promo, probably liquidates at some point, but it's no different than, say, RETO. When they did the walk up as well, we talked about all these wicks, right? They're soaking up. There's a buyer present. So same deal with this EH. On the daily, you can see there is a seller present. And that's the sort of the thought process with this particular trade right over here. Seller present, seller present, seller present. That's the stuff that I want to watch for because there's a lot of dip buyers, there's a lot of covers, and then they meet pressure. A lot of rebounds, pressure. And that's exactly what I want to see when I want to be fading something. So TAL, I want to see Morning shove, fail. Morning shove, fail. Because once it does break down, all of those dip buyers are going to hit the bids. F, big disaster on earnings. Nice unwinder all day. Ideally, some morning exhaustion into the 10-20s range and then starts to fade back. Hopefully, it provides a nice opportunity. Same deal with AVTR. Nice unwinder. Typically, I look for a little bit of a relief rally, meaning some sort of push in the morning, and then starts to sort of fade off from there. Under the failed follow through, I have LABD and FAS. These are both ETFs, and it's kind of about that time. This is when I start to shift into looking at potential trades for more of a macro level kind of trade. You can obviously do the VIX and different things like that. When the market settles down, obviously VIX will as well. Typically, we're either nearing some sort of real panic in the market where this will just go up 50% real fast. You can kind of see it's at a top right now. So if we start to open up to the downside, obviously this will go a little bit nuts. But that said, if we do stabilize at all in the markets and show any bit of bounce, which I do think that we will, typically what happens is like FAS and LABD, they start to build up this premium. And as long as there's no panic, these things are going to stay heavy. But the trouble is usually you get that one-off day where the market has this huge rebound. And it's really not, again, going back to what we were talking about on BTAI and all these other ones, it's not necessarily that it's bullish. It's just, all right, it stopped going down for a minute, and now all these bounce players are coming in, and then that's fueling the short cover. So it actually, it's coming up, and it looks like we're finally bouncing. Okay, we finally hit bottom, but did we really, or is it just a short-term kind of bounce within the downtrend? And that's what I would be cautious of in a situation like LABD or FAS, UVXY, things like that, because you usually get that first home run trade, and then you start to get this false sense of confidence that you made a good trade, and you realize that, no, you didn't really make that good of a trade. It just, you nailed it that one day, and then you start to give it back because of how big of a trade it was. Meaning, a lot of times on that first day, it unwinds again, and you look at it and you're like, oh, $3 per share. You either nailed it or you didn't. And then so the next day you want to go back for the same thing, and then it's never as easy after that. At least for me. Mullen, higher the better. Ideally, just morning shoves each day. This has obviously a huge bag holder base, so it's always going to have some bids. So just watch for maybe 2-3 cents in the morning and then fade off from there. It's been a great trader lately. Next up, continuation side. HUBC is not going away. No position here, but it's obvious that there's a buyer here. It reminds me a lot of QBTS. If you guys remember that big swing I had put on, that was probably my last big swing trade. But same kind of situation where it's like, this should have died. We talked about those wicks getting soaked up each time, and then it started to take off. This reminds me of HUBC, but again, this, obviously HUBC could turn in a second, but I would be interested if 80 started to build. There's obviously a buyer in the tape. They've been supporting a particular line you can kind of see here. And obviously 80 becomes that key level. That said, I'm not super bulled up. I did trade it this day, and then it exhausted off the 80 level. But from this point forward, I'd have to see it over 80. Spec, I'd be watching similar idea to LIFW, where yesterday or Thursday's idea was a potential week open for a rip, and we got that exact trade. Spec, potentially the same thing. NRDS, NerdWallet, nice breakout, big level here. So if it starts to base at 9, I think we could see a nice push back up towards 10 or 11. But I'm looking to trend join if we have a week open, red to green type of situation. IBRX, so far so good. This was a liquidity trap idea, and you can see how that played out. So we had the huge volume day. sits back this day, consolidates, and then as I had said in the room, 180s being that level for the liquidity trap confirmation. So once 180s became the base, I mean, it literally went straight up since. So a pretty nice opportunity there from that idea on the long side. And then LIAN, you guys should be familiar with it. Basically ran about $2 per share from the kind of big picture entry. I think if you're trying to intraday trade this, you'll get chopped up. A lot of people have asked me about this particular trade. You gotta know what type of trades these are. And you know, same thing with BTAI. It's fine if you're trading intraday, but if you're using, you know, an aggressive you know, size, then you know you're probably going to get chopped up on it. If you're using a little bit less size, bigger picture, buying on the flush instead of the breakouts, you know, these types of trades, if you buy the breakouts, you're probably going to lose more often than not. So you want to just be cautious. Make sure you kind of fit it into the right category. Is this a momentum trade or is this more of a big picture trade? And I feel like a lot of times people try to force an intraday trade as a bigger picture trade, and then you oversize and you chop yourself out. Last but not least, we had, I just wanted to go over this top trade again, just to kind of show you guys. We've been talking about, you know, all the wash. I mean, you can just see how structured this thing is. And I think even the other day, yeah, right over here, I think. I mean, this is just not natural, right? And it's just the same price, and they're just tossing 100K, 100K, 50K, 80K, 90K. And it's just two even numbers. You know, they're just tossing around the same volume back and forth, creating the appearance that, you know, there's something there. Whether or not they're just creating a volume to try to liquidate, or whether they're trying to create volume to trap, we'll see. But it's just the same conversation that we had, you know, when I went over it over here about all that volume that was coming in. And same thing with EJH, you know, things like this, where this is obviously just a promotion as well, and the volume is all, you know, fake. This particular day, 4 million shares, I think 2 million of it was in the first candle, and they just hit all the bids, and then, you know, there was no volume for the rest of the day. So at any rate, that's it. That's what I'm watching for on Monday. Again, Sava and Mullen are probably the top two watches, and then we've got potentially F and what was the other one? AVTR. AVTR as some sort of reactive trade. But again, Sava, Mullen, probably the top watches. Then we'll probably add a few more just from pre-market alone. But like I said, there was a period of time where, you know, literally you just got to wake up and look at the gappers, which is that particular part of the cycle. Meaning, you know, when we have a TPST that runs 3,000% or whatever, you know, you just have to show up and see what's happening in the mornings. Then as things start to die down, that's when your edge comes from preparation. So that's that. I did have a couple other, let's see. We've got Yogan. Oh man, I'm going to kill his name. I'm just going to call him Yogan. And we have no. Jeez, these names are tough. I'm going to post the winners of the t-shirts in Scan, because I can't pronounce half the things that are on there. But anyway, leave your key takeaway on YouTube, on the video, or on Twitter. Make sure you like, retweet, and have a good rest of your weekend.